Welcome to my trading channel. You know, Trendlines. They seem so simple, right? But the problem is, most traders misunderstand them. So today, we're going to go beyond just drawing a few lines on a chart. We're going to build an entire trading strategy from start to finish, which can turn this basic tool into a powerful and highly profitable system. So here's what we're going to explore. We'll start with the most fundamentals. Then, we'll delve into the details of how to draw these lines with high accuracy. Next, we'll cover two core strategies, the bounce and the breakout. And of course, we have to mention the most important part, which is risk management. And remember to tune in to the end, because I'll guide you through a real trade that used exactly this method to earn over $27,000. Okay, let's start with the basics. I mean, you have to build a solid foundation before you can think about building a house, right? So here's the big question, right? Why do some traders kill it with trend lines, while others, well, not so much? The secret, according to our source material, isn't the tool itself, it's the system, the pros. They don't just see a line, they have a repeatable, almost boring process for drawing it, reading it, and trading off of it. Okay, so here's the crucial thing. To get a trend line is so much more than just connecting a few dots on a screen. Think of it as a visual story of market psychology. Is the momentum bullish? Is it bearish? These lines literally draw that story out for us, helping us spot those potential turning points. And this is where it gets really simple and really cool. The whole market direction gets boiled down to just two clear patterns. For an uptrend, that line is basically a floor, you know, holding the price up as it keeps making higher lows. And for a downtrend, it's the complete opposite. It's a ceiling, pushing the price down as it makes lower highs. Simple as that. Okay, let's move on, because how you draw these lines is absolutely key. I mean, an inaccurate trend line. It's actually worse than having no trend line at all. It can seriously mislead you. So the source gives us this really systematic approach called top-down analysis. And it's exactly what it sounds like. You start way up high, on a monthly or weekly chart to get the big picture trend. You've got to know the main current of the river, right? Then you start zooming in down to your daily or hourly chart and you fine-tune your lines as you go. This gives you so much context for every single trade you consider. And listen up, because this is a fantastic pro tip from the source. Instead of using the standard trendline tool, you know, the one that just connects 2 points and stops, use the ray tool. Why? Because the ray projects that line out into the future indefinitely. It shows you exactly where the price might run into that line down the road. It's a game changer. Alright, now for the fun parts. Our lines are drawn and they're accurate. Now we can actually build our strategy. See, every single time the price comes up to our trend line, it sets up one of two high probability scenarios that we can trade. And here they are. It's really that simple. You can either bet with the trend, expecting it to continue. That's what we call the bounce. Or you can bet against the trend, looking for a reversal. And that's the breakout. Two clear paths, two distinct strategies every single time. So the bounce is pretty much your classic trend following play. Let's say a stock is in a really clear downtrend. You'd be patiently waiting for the price to rally up, and just kiss that downward trend line. And that's your cue to place a sell order because you're expecting it to get rejected and head right back down. Now, the breakout. The author of our source material calls this one her all-time favorite. And you can see why, right? Because when a price decisively breaks through a trend line that's been holding for a long, long time, well, that can signal a massive shift in market momentum. We could be looking at the very beginning of a whole new trend. And this quote just nails the entry signal. There's no guesswork here. It's not fuzzy. The break itself is your signal to go. Once that price closes firmly on the other side of that line, that's your green light. It's time to act. Okay, stop and listen up because this next part is without a doubt the most important section. We're talking about protecting your money. A perfect entry means nothing, absolutely nothing, if you don't manage your risk properly. This right here is what separates the amateurs from the pros. And here is the golden rule, the non-negotiable rule from our source. You never, ever risk more than 1% to 2% of your entire trading account on a single trade. That's it. This one rule ensures that even if you hit a nasty losing streak, you'll still be in the game. And for this strategy, placing your stop loss couldn't be simpler or more logical. Just put it on the other side of the trend line. That's it. If you're buying a bounce off an uptrend line, your stop goes just below it. Why? Because if the price breaks that line, your entire reason for being in the trade is gone. The idea was wrong. You take the small, planned loss and you move on. So when it comes to taking profits, you've got two clear options. and they kind of fit different styles. Option 1. You can aim for a known support or resistance level to lock in a quick win, nice and simple. Option 2 is for letting your winners run. You can trail your stop loss just behind the trend line, staying in the trade for as long as that trend keeps going. Okay, theory is great and all, but let's see how this actually works in the real world. I'm going to walk you through a trade from the source material that shows exactly how all these pieces fit together perfectly. So the example is a short trade, and the setup was this. The trader spotted a major upward trend line, one that had been acting as solid support for the price for a good long while. Okay, let's break this down piece by piece. Just look at how every single step follows the rules we've laid out. The entry, a clean break below that major trend line. That's our breakout strategy in action. The stop loss, placed logically, right on the other side of a new downward trend line that was starting to form. And the take profit, it was set at a super clear target, a previous support level where you'd expect buyers to show up. And the result of all that discipline? You see the number. By following a clear plan, a solid entry, a defined stop, a logical target, this one trade locked in a profit of $27,600. So, if you really want to master this, here are a few final tips. First, remember that markets are always moving, so you have to adjust your lines as new price action comes in. Don't just set it and forget it. Second, always keep that top-down, multi-time frame perspective. And finally, get good at spotting those support and resistance zones. They're your best friend for setting clear, logical take-profit targets. So what's the big takeaway here? It's that a simple line, something anyone can draw on a chart, can become the bedrock of a consistently profitable strategy if you use it with a systematic and disciplined process. You now have that complete framework. So the only real question left is, which trend are you going to analyze first?